Ladies and gentlemen, thank you very much. Day in and day out, we are breathing in and breathing out markets. So obviously our 15th birthday has to be with the markets. So thank you very much for joining in these numbers. Rhythm, Ratnesh, Neelkant and Abhay, thank you very much. The commodity super cycle. I mean, I'm beginning with that question because all of you are heading foreign brokerages and in a sense are on the cusp or are on the borders of the foreign view of India, which is why I want you to delineate the global scenario for us and whether that will remain as clement to India and to Indian equities as it has been over the last 13 months. Okay, to start with you, Rhythm, would you say that this commodity super cycle, which is at its perhaps lowest ebb compared to the last maybe 10 years, will continue that way for, say, another 12 to 18 months?
Disruptive positive change for India. It's disruptive. Forget about what the government is doing. Forget about the growth cycle. This is such a big change on its own.
But
and I don't think it's fully priced.
You at least expect it to plateau here for the next 12 months.
Lata, even if it went up a bit, okay, I'll get 300 basis points. It's still a very big change. Now the likelihood is that it may not.
Would you agree, Abhay, that we are going to see inflation dip anyways because of this huge global commodity super cycle at its lowest ebb?
That's right. No, we do believe that. Completely agree with that, and completely agree with Rhythm that that itself seeds India's virtuous cycle. Remember, India's vicious cycle had started with the commodity up cycle, and particularly in the last 2 to 3 years was really the high commodity prices, which ultimately translated into all our problems, leading to the fiscal deficit and higher inflation. So completely concur that the sedate commodity cycle is going to be very positive for India.
Okay. Neelkant, what's your view therefore on, so many of views expressed on the credit policy? Rakesh believing that, Raghuram Rajan will perhaps in future believe that December itself he could have cut rates. What's your own sense? That was it wise to have waited?
I think this rate cut, whenever it happens, is not any other rate cut. I mean, it will be an inflection point, which is something that the governor mentioned in the policy document as well. You cannot take that lightly. So you cannot cut a rate and 3 months later say, oh, sorry, I was wrong, and I'm going to maintain rates or raise rates again. So I think it's much better to be prudent. See, what had happened from July to November, and I think very few of us do our vegetable shopping ourselves, but if you do that, like I do, there was a very sharp spike in vegetable prices. Tomatoes went from 15 rupees a kilo to 80 rupees a kilo from July to November. And there was, in India, there is a very high concentration of vegetable production. So if you have weather disruptions in one area, it's a big disruption. So all of those reasons led to a big spike from July to November. From about first week of December, we saw a very sharp decline in vegetable prices as supply came into the market. This year, if we don't see that, we will see CPI going back to 7%. Okay. Right? So it is important that the governor and the RBI wait 2 months and see if we are going to see a repeat of that before they embark on a rate cut cycle. So he signaled very clearly that he is comfortable. I mean, he is also very comfortable with the price of oil coming down. But I think it is much better to be prudent.
So the 4% inflation which appears to be given for Rhythm and Rakesh is not a given for you.
It's too early for me to take a call on that. I would wait and see how vegetable prices move, because milk prices are still high, right? Milk powder prices globally have come down.
Yes.
So some companies will tell you that, great, milk prices are coming down, but milk prices and CPI, milk prices year on year in the stuff that you buy, I don't think they're coming down. So we need to wait for another 2-3 months and see if the back of the food inflation has been broken. Most of it came from animal products and fruits and vegetables. And then we can take a call on whether 6% is right for the next year. Okay.
I want to ask about the inflection in growth. When are you all expecting from all of you? When is that turn in the quarter coming? That 2003 fourth quarter that we saw, when you saw the sudden change and, thereafter it became a virtuous cycle.
So Lata, in 2003, the recovery was like this.
Yes.
It was V-shaped. Right now it's U-shaped. And it's already happened. The bottom is behind us. It was December 13. Broad market earnings growth was -5%. Today it's in the teens. Okay. So we are already actually on our way. I think in the next 4 to 6 quarters, we'll probably hit 20% earnings growth. And I think, so my estimates for F17 on the Sensex are 20% ahead of the street, and I think there's upward risk to my earnings estimates because we have not fully factored in the decline in commodity prices. So I think the street models this on an Excel spreadsheet, but in reality earnings don't work off Excel spreadsheets.
Okay.
So I think we will get the earnings cycle that you're looking for. I think it's underway. In the next 3-4 quarters, it will start getting visible, and in the next 5-6 quarters, I think we should hit the 20% mark.
I can't calculate so fast. So why don't you tell me what is the Sensex earnings FY16, FY17?
So the street is at 1600 rupees EPS today for F15. Okay. Take it forward. My number for F17 is 2500 rupees.
Okay.
Okay. Approximately. I mean, it's a little bit more than that, but that's where we are approximately.
Okay. And you think that is the underestimation?
I think there's upside risk. I mean, it doesn't assume any major policy reform from the government. It doesn't, it doesn't assume a major rate cycle. It doesn't assume oil even at $65. It assumes oil at $90. Okay. So just to keep it into context.
Better than the base case.
Yeah. So I think there is risk to the upside here. Both on equities as well as on earnings.
1600 FY16, 2500 FY17.
F15 is 1600.
Okay.
Yeah, this current
F15 and F16 is 2500.
F17.
2 years. Ratnesh, would you agree with these kind of valuations? And if this is the kind of earnings growth, and if yours squares with these, would India be expensive at all at current levels?
I am currently at this point in time, my stand is that let us not have too much of, I think if we have linear thinking at this point, which is, should it be 10%, should it be 15%, we will all be wrong. I think we are at an inflection point. When the turn comes, we will be market earnings, there will be a year or two where growth will be in excess of 25%.
Okay.
That's my view, which is obviously, currently not in any forecasts or models.
So it's still in buy mode. I mean, you wouldn't think India is expensive if you're expecting that kind of an inflection in earnings growth.
No, in valuations basis, if you look at even current forecasts which are there, I think you are probably one standard
17
deviation.
at least, right?
You are barely one standard deviation above the mean. And in my view, the current 1 year, 2 year forward forecasts which are there, if everything goes right, what is happening, all the other things which are being talked about in terms of 4% inflation or whatever else, I think earnings will surprise on the upside.
No, but your analysis is not predicated on a 4% inflation.
No, it's not.
Okay, that would be the icing on the cake.
Yeah, so
on 2500 EPS, the market is trading at 11 times F17.
2500, yes.
2 years forward, 11 times. Okay. 11 times. Okay. For an economy that will grow 12% top line, for the next 10-12 years without trouble, and forget 18%, which Rakesh ji was talking about, 15% earnings growth le lo.
Okay.
So what is the problem at 11 times for 15% earnings growth 2 year forward?
And the biggest delta,
I don't think valuation is a problem.
Okay.
And we are not even taking interest rate cuts into account. Okay, so bond yield was 8.1%, now it's 7.95. Okay, so and in Morgan Stanley's top 15 global trades for 2015, there are 2 Indian trades there. And it's not equities. It's the local bond and the currency.
And what is the call on the currency there?
Well, against the euro, not dollar.
Okay.
So we're expecting that to go from 77 to 69 against INR euro cross. And the bond yield, when we published the report, it was 8.1 and we said 7.5.
Okay.
No,
Congratulations.
2 top trades in 15. I have not seen that happen before in my life. We had a bull market even before, but we have never seen 2 non-equity trades in the top 15 Morgan Stanley.
When is this 69 to the euro?
This is next year's forecast.
Okay, so those of you going to Europe, please postpone your trip to next year.
And you see, I think related to that point is that, let's say we quibble a lot about, say, what should be the EPS or earnings growth, whether it should be 10, 15, 20. But the biggest delta for the market comes from risk premium.
Okay.
Adjustment of risk premium, which reflects in your bond yields, which is obviously derived by growth expectations and inflation expectation, etc. So I think we have a lot more ways to travel in terms of contraction and risk premium being attached, for India. And as the growth recovery comes back, as the rates, cut cycle begins, I think you will see the risk premiums further contract, and that will cause more upside to the valuations for you.